This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule of events for Tuesday, March 22nd. Now, today is the biggest day of the week for events and indicators. In the first instance, the preliminary market purchasing managers indices from several of the major countries, including Japan, Germany, the EU, and the US, are released. The European ones start coming out around 800 GMT. They're expected to show a modestly accelerating expansion in manufacturing for both the EU and the US. Now, that could weaken Eurodollar slightly, and that a healthy global economy would make it more likely that the Fed goes ahead with tightening policy. However, the relationship between the two indices on the one hand and Eurodollar on the other isn't that robust, as the graph shows. Unusually, the Ifo index and ZEW survey will be released on the same day, giving a very detailed view of the German economy. These indices have been trending lower recently, although they're still showing some expansion. The key point is that the expectations indices are expected to move higher, and those are the ones that are important for market expectations, of course. Now, traders should be aware of the possibility of some market volatility if these various indices diverge and cause confusion about what's going on. Also remember that the US index comes out after the European ones and could cause some reversal then. The UK reports its CPI at 9:30 GMT. The inflation rates started to turn up slightly, but meanwhile, inflation expectations continue to decline. The slight uptick in the year-on-year rate of inflation expected out today shouldn't change that picture very much. It might therefore not be particularly market affecting. The impact of this indicator on sterling, on cable and euro sterling is inconsistent, so it's not that reliable an indicator to take a position on anyway. The Richmond Fed survey of manufacturing activity comes out at 1400 GMT. Now, the Philly Fed Index and the Empire State Manufacturing Index both far exceeded expectations. That increases the likelihood of a positive surprise from the Richmond Fed Index, too. That could be positive for the dollar. Finally, the Canadian government announces its budget at 2000 GMT. Finance Minister Morneau has already predicted a deficit of more than 18 billion Canadian dollars before any new spending measures. And the new Trudeau administration has pledged to undertake a massive infrastructure spending program and make other reforms that could pump the deficit up to 30 billion Canadian dollars, according to some estimates. But even with such deficits, the debt-to-GDP ratio should remain low relative to other OECD economies, so this shouldn't be a big worry to foreigners or to holders of Canadian dollar-denominated debt. Now, the Bank of Canada is waiting to see what kind of fiscal program the new government comes up with. The bank said it'll incorporate the impact of these measures into its new projections, which will be released on 13 April. So, the new fiscal plans will directly affect monetary policy and thereby the Canadian dollar. All things being equal, a more stimulatory fiscal policy should reduce the need for the Bank of Canada to ease monetary policy, and it should therefore be positive for the Canadian dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.